Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for Wednesday evening, January 28th. Getting a lot of people signing up for the mentoring on Saturday. I'm very excited. Program will be the same whether there's 3 people there or 300, but the more people, the merrier. I love sharing the things that I've learned over time and hoping I can help other investors add to their retirement accounts and whatever else is important to them. Today, just where's the breath? I mean, it's the third day in a row when most of the indices had less than half the percent of the stocks, less than 50% were up. So more losers than winners day after day after day is probably not a way to build a sustainable bull market. We did get big cap earnings. I'm actually doing this before futures are out. It's 5:45. Microsoft down a lot from the close, 25 points. Uh, just over 5%. On the other hand, Meta's up a lot and Tesla's up. So it'll be interesting to see how the futures digest it. Now, of course, I've learned from doing this for a long time, things moderate overnight, and we'll see how much Microsoft is down. It's not as if they missed their numbers. I'll just put it that way. Again, my name is Jeffrey Scott, marketmripro@gmail.com, my Google Groups top-down trader, and my website's marketmripro.com. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools, top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own, buy, or sell any stock I mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And as we'll talk about on Saturday, I've got tools in a lot of different platforms. My Google group is the best way to keep in touch because it doesn't cost any money. You get invites to all my live meetings. You get videos and handouts that I won't put on YouTube, especially if I talk about my own personal performance. You'll get discounts when things aren't on sale, and you control your access. So go to Google Groups, go to all groups, go to join groups, join Top Down Trader, let us know how you want to be contacted. And by the way, you just reverse the process when you want to quit. You don't have to worry about me spamming you to death. I won't do it anyways. From a news perspective, Powell and the FOMC, as we predicted, was a non-event. A lot of questions about subpoenas and um, the issue with the building and the independence of the Fed, and he pretty much deflected everything. On Thursday, we'll get January 24th jobless claims, so that's important, could move the market. And then we got delayed reports of trade deficits and revised productivity and delayed wholesale inventory and factory orders. And then we get some delayed PPIs on Friday. So big earnings tonight, as we talked about. IBM was also up a lot. Las Vegas Sands was down. Before the open tomorrow, we'll get MasterCard, Caterpillar, Nokia, and others. And then after hours, we'll see how Apple fares. So still a lot to go. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I did adjustments to my Microsoft position today. I'm still long, but I bought a 480, 460 spread on puts so that I could mitigate some of a miss. Right now I'm looking okay because the price is 456, but by the time they expire on Friday, who knows what the price will be. So I probably won't be waiting that long. As I mentioned, a free mentoring session on Saturday from 10 to probably 1 or 2. Spots are limited. We are filling up. Registration link will be below. It's open to all traders. It's, if you trade stocks or options, if you're a swing trader, if you enter trades hoping to be in them for days to weeks to months, not minutes to hours, and you would like to improve a top-down approach or learn about it, it's for you. We're going to talk about top-down investing, what I've learned from Ian Woodward and others, how I analyze market sectors, groups, and stocks, go through a couple of my favorite scans, and then talk about how I use options as stock replacement, some of my favorite things to talk about. For more information about anything that I talk about, marketmripro@gmail.com. I answer my own emails. If you own the program and you're having an issue, Praveen's at coding@marketmripro.com. He's my partner and the brilliant developer who took my brain and turned it into a product. And think about joining Top Down Trader. So I always start with the daily daily briefing rather, and it shows me that on Wednesday the dollar finally rallied. It's been weak for a while. It's still down over 2% over the last 5 days. Qs were up 0.33, diamonds were up 0.02, spiders up 0.01, Bitcoin down 0.24, VIX down 0.26, and Russell was down the most 0.51. Yeah, I'm probably most levered to the Russell. So during the day I was down a fair amount, and then as the Russell came off its lows and we got closer to the end, I turned positive, and it turned out to be a pretty good day. Over the weekend, I showed you how extended the Russell was from its moving average clusters and suggested that this was going to be a slow week from the Russell, and it has been. If we look at the S&P 500 leadership, again, it was energy up 0.77, technology 0.73. They were the only gainers in the S&P 500. So the indices didn't look bad, but the breadth wasn't there. The major losers were staples, real estate, discretionary, healthcare, sort of a hodgepodge, including things that are defensive and not so defensive. If we look at themes, it's uranium, clean tech, gold, solar, semis, data centers continue to be hot, copper, silver, telecommunications, exploration, and infrastructure and MLPs all up 1%. And if you look at the losing themes, it was cannabis, biotech, Southeast Asia, millennials, fintech, aerospace and defense, e-commerce, retail, cybersecurity, transports, and so on. So clearly a mixed day. This is not an easy market. Now, if you had sold everything, if you were smart enough and just bought gold and silver, you'd be flying high right now and probably pretty happy. But then you'd be having to wonder when to get off the elevator. I'm on the stairs. I've got gold and silver. I've lightened up my positions. I'm mostly in equities. I do have a bunch of miners, which have done fairly well. But both gold and silver are getting to me hot to handles. So I have some. I just not really massively overweighted there. Concerning part to me in the S&P 1500, only 34% of the stocks were up. And the NASDAQ only 30%, and the NYSE only 34%. Hence my title. Odds are you had a lot of losing stocks today because more than half the stocks were down. I guess everybody's selling everything and buying gold and silver. Interestingly, new highs minus new lows haven't changed much, still plus 112. And on the NASDAQ, it's plus 38, so still favorable, but off the highs that we saw last weekend. Timing model, I'm going to go fast tonight because I'll do the education on Saturday and not tonight. You could see the green or the red on the bottom is the timing model. So on the daily model, 3 out of 4 are in a buy, and that would be the spiders, the Qs, and the Russell are in a buy. The diamonds are in a sell. If I go to the weekly model, whoops, I hit the wrong thing. My bad. Go back to the timing and hit the weekly. Here we go. Let me hit this thing to clean that up. On the weekly, everything is still in a buy, and on a monthly, everything's still in a buy. So I would characterize this market, therefore, as a uptrend under some pressure, but still predominantly bullish. And I don't short markets that are predominantly bullish. The breadth bothers me, and that could be the sign of something changing, but we've been going through this off and on without the market really rolling over. If I look at the U.S. indexes to assess what's going on today, let's just blow this one up. So the spiders opened higher, traded up, traded down, closed below the middle of the range. We're actually down 0.01%. Really nothing burger day, nothing really has changed. The moving averages are lined up underneath in support. This is the longer term. This is the 5-day. This is the all time. This is the 10-day in green. All the seasonalities say it's probably up over the next couple of weeks. Predictive model there. The Qs look even better. We've been looking at the Qs over the last week, talking about this line here and needing to break out. Well, it broke out, and again, it gapped up, closed at the lower part of the gap, so it's not a super strong close. Not a surprise with the different earnings coming out tonight, but it's an uptrend, and I love it when you got the 17 above the 21, above the 50. Excuse me, the 17 here. I guess it doesn't have the 21 above the 50, above the 100, above the 200. So the moving averages are lining up the way we'd like in a bullish pattern. Still be long Qs. If we look at the diamonds, not nearly as strong as the others, and perhaps we should be looking at something like this. But if you're in a big uptrend and then you go into a bit of a pattern like this, it's probably a continuation pattern. But we're at the bottom of the channel. Does that mean we trade up tomorrow? Probably. If we look at volatility, the Russell rather, still is respecting the stupid trend line. If the market's all wine and roses and going to the moon and everybody should be in the market bullish and happy, I'm struggling with why we won't break down on the VIX. So was the VIX up today? It was flat, but it's flat in the setting of creeping uptrend that they are respecting. So anything that shows to me that the VIX is heading higher gets me a little bit nervous. So this is the first concerning thing to me. And then the dollar, which is just horribly weak, selling off from the height over here. Oh, I hit the wrong tool. Now learn my own tools. I want this thing. From top to bottom, 15% in a little bit over a year, from January to January. I feel for anybody who goes to Europe right now and goes shopping because your buying power is going to suck. But lots of things going on with the U.S. dollar, the Japanese yen, and despite the fact that Besant came out today and said he supports a strong dollar, words are cheap because weak dollar means our goods are cheap at other places. It means we sell more outside the U.S. and it's easier to pay off our debt. So not sure they're really supporting a strong dollar. What likes a weak dollar is certainly commodities, and this is just the game that won't stop. So gold had a massive day. I think it had the biggest positive day of all time. Look at the size of that, over 200 points at one point today, and you can see the size of that candle up 3.91%. Silver, another positive day as well, 3.95. How high can they go? Well, you could have said the same thing 30 points ago. It won't end well, but until it ends, it's going to keep going higher and making money for people. I think the most impressive thing is oil that's broken out, and you could see that the 10-year seasonality is not very strong, but the longer-term seasonality is super duper strong. That's the 5-year, and this is the long term. So maybe we shouldn't be surprised to see oil running up here. It's broken the trend line. Natural gas, led oil higher, but the last couple of bars have been sort of sideways, but we're consolidating above the 200, not below. That's probably bullish for natural gas. 10-year was up again today, 0.71, and the 30-year was also up, although it finished in the bottom of the range, up about 0.5%. Still below 10 and not making any rapid moves. The Fed controls the short end of the curve. The bond market The smart money controls the long. And I guess they weren't too unhappy with the Fed decision today. Probably would have been unhappy if they cut. If I look at the buckets to get a sense of the market strength, it's still fairly neutral, but notice the number of stocks below the Bollinger Bands are starting to heat up. Nothing is high enough to be concerned about. It's just something that if we had 2 or 3 more days like this, might be getting to a signal. On the market breadth, we could see the NYSE continues to struggle against this prior highs line and actually was down a little bit today, 1/3%, while the NASDAQ was up. It failed to hold the gap that it made early in the day. And what happened to my price change? Hold on, let me add that to this chart. I like to have the little white price change. So closing price to closing price on the next day, and now it should be sitting up here. So today it was up just a bit, 0.17%, but holding above the trend line. How bearish can you be when the NASDAQ composite and the NYSE composite are trading at all-time highs or just below? Now, we've burnt off some of the overheatedness. The stocks above the moving averages are starting to trend down on both. We can see the new high, new lows are positive. We were mixed with the AD line negative on the NYSE, but positive on the NASDAQ today. And the up-down volume negative a little bit on the NYSE and positive on the NASDAQ. No new signals here, and you can see the 13-week new high, new lows come off of concerning areas. It's 0.74, 0.46, no signal, no concern. I don't even need to go to the bigger market breadth tool anymore because the main thing we went for was the 13-week new high, new low, but you do see we have additional indexes. The spiders at 0.67, S&P 1500 at 0.65, 0.51 on the Russell, and the NASDAQ composite, which we just looked at, is 0.48. So none of these overbought signals that were concerning. Very quickly, if we look at the sector timing model, which is not ratio charts, but actually the sectors, and I don't consider Bitcoin a sector, but I had room for an extra. So Bitcoin in the markets today was really didn't do much at all. It's up 0.26 now, but it looks like it was down 0.3 or so during a little bit during market hours, still below the timing model with the yellow line here, so it's still technically a sell. This looks great. This is technology, which is breaking out from a consolidation and a squeeze like that. The next one is discretionary, which is kind of just riding on the moving averages, not doing much, not selling off though. Communication similar, but a couple of red candles in a day, still above the yellow line. Industrials is pulling back a little bit, forming a wedge here, still looks bullish. Financials has broken down. Energy is on fire. You can see a nice run up here, separating from the moving averages. Materials sort of flattening out here, not really doing much nefariously. And we can see here real estate has pulled back some, actually went to a sell with a number of red dots today, which is negative. And then utilities bounced up a lot yesterday, giving us a buy signal, but didn't really do much today in the market. Still above the 50, still have to be considered bullish. And Staples is in the midst of a nice run. We talked about that the same last night. So, and then healthcare broke down. We saw some weakness in managed care over the last couple of days. Biotech was weak today. Perhaps it was related to the list of drugs that the government's going to negotiate lower prices that came out last night. And here we are back to Bitcoin. So I'm going to pause it for a second. I'll be back momentarily to finish my review. Okay, if we move over and we look at some of my favorite stocks and a couple of the sectors. It's my key stock timing one. Pop it open. Amazon, not a great day, not a horrible day. Closed midway in the prior candle, down 0.68. Apple trying hard, all about earnings tomorrow. I have it in my long-term accounts, but the long-term accounts are long-term, and I pretty much ignore them during earning seasons. Google, oh, got this in my long-term and my short-term accounts. I wish I had more. Google is by far the best-looking chart of the mags, up 0.38 today. Meta is up a lot after hours, so clearly is going to break through this 200. It's been in a buy, according to my timing model, since this candle broke above the moving averages. And you look down here, you have breakout momentum, volume, and a CPR. So Meta seems to be in a recovery mode. Netflix, not so much. It's still got a lot of stuff to get through, both from the perspective of getting a deal done with Warner Brothers at a fair price and then dealing with all the regulatory hassle. So that could be pressured for a while. Tesla's up 9-10 points after hours. It was up more, pulled back a little bit, but seems to have a good reception to its earnings. We'll see if it can close above the yellow line and trigger a change in the bongo. Right now it's in a sell, really not doing much of anything. NVIDIA, with the data center theme hot, this thing looks like it wants to go higher now. I thought it might stay, and maybe it still will stay in a bit of a trading range until the earnings come out, but it had a nice move up today, actually gapped up and closed kind of where it opened up, almost 1.6%. Still think those earnings are going to be incredible. They've gotten some positive reception. The Chinese have opened up a little bit on their second most powerful chip to let them export. Microsoft, what a disappointment. Right now it's going to open somewhere in this range tomorrow, and then we'll see how well it's defended. Now, what I just said is a lie. If it was to open right now, it would be in the 450 to 460 range. But who knows where it'll be tomorrow when it gets to that. I defended or protected my position. I've got calls I sold against it. I've got a small position in my short-term account. And then I bought a double size spread to the downside, which will mitigate most of the heat. And I did that knowing that I wouldn't have as much upside if it went well. I just didn't want to take a big hit to the downside. You know, this thing about preserving capital, especially in my short-term account. And then Labu had a rough day today. Healthcare sold off yesterday, so technically it flipped to a sell signal today, closing below the moving averages, at least on the daily charts. I'm sure if I look at a weekly, it's still in a buy. And let's just flip to that real quick. And you can see that still in a buy on the weekly, but we watch it on the daily, and certainly it's under a little bit of pressure here. And then the next one I think is data centers, or pharma rather. Pharma, as I mentioned, both pharma and biotech under a little pressure today. The government has this thing called IRA, the Inflation Reduction Act. Buried within that Inflation Reduction Act is the ability to, quote, negotiate, end quote, some of the most expensive drugs in Medicare. 26 and 27 were oral medications, so it's just started in 26. 28 will be injectables, and they came up with 15 names. Now, by definition, they are the most highest sales drugs that are out there. So if you're a pharma company and you're selling a drug for $1,000 and you get named as one of the IRA drugs, your $1,000 goes down to $400 to $500, and it's not much of a negotiation. And I think that is not good for long-term prospects of pharma and biotech. Hence why they're pressured every time something brings that up, or if there's more discussions in Washington about the future. Data centers, no discussions there except boom. And I don't mean blowing up boom, I mean boom as in booming. So much to be done. All the issues about is there enough energy, and the crazy things going on with RAM prices and storage, the chips. But an AI world is going to require a lot of data centers. And so they're going higher, and so are all the components. You look at SanDisk, you look at Micron, stocks that are like commodities, and historically they would go up until more supply came in or demand dropped, and then they fall like an elephant. Except now all we hear about is the lack of supply, and they keep going higher. They look like a silver chart. Maybe there's a tie between the two. I will tell you what's bad about them. Wait till you go and buy your next personal computer. Probably be a big market for my used computers because wait till you see, because the memory prices have gone up, the SSD prices have gone up. I bet the processors have probably gone down. Intel's processors typically don't go up with every generation. You get more for the same amount of money. But all the things that go into a computer, um, video cards, are becoming hot commodities. So transports gave us a one-day rally. Actually closed down enough today, took out the prior low here. Still at a buy, technically above the yellow line. It was down 1.41%. So I think it's pretty clear to me what we're seeing. We're still seeing strength in the metals and data centers, and a lot of stocks just not participating as we saw by the breadth. If I go and I start to look at stocks, I go to the JS layout and I go under top down and I look to see what sectors led. And I've got energy, technology, and basic materials. Okay. And then I go here and I look at what were the top 10. 1, 2, 3, 4, 6, 7, 8, 9, and 10. And look at these. Uranium, data centers. Hardware, data centers. Solar, alternative energy for data centers. Technology distributors, they sell a lot of the cabling and wiring, data centers. Gold, no. Weak dollar. Consumer electronics, data centers. Silver, there is a role for silver in data centers. Check. Gas and midstream, you got to get energy moving in gas. This is probably a natural gas tie-in, probably not as much data centers. Copper, data centers. Semiconductors, data centers. Communication equipment, right out of the top 10. Data centers. It's a data center world. Let's just look to start with those that had up impulses. We'll take a look at a few as we go down the list. Texas Instruments up on earnings, so you can see the next earnings are not to April 22nd, which is 84 days away. We look here, you had $1.27, which was compared to $1.30, actually lower with no surprise. Revenue change 10%, negative surprise. Market still loved it. It traded higher, pays a 3% dividend. We're going to see $1.30 against $1.28. Not a lot of earnings growth. Chart looks okay. I don't like the fundamentals. And yes, you are getting extended. We looked at NXT, I think, over the weekend. Probably back here when it came over the 50. This is a solar stock. Next Power, one of the better ones, sort of had a cup and a handle and a breakout. It had earnings last night, $1.10 versus $1.03. Not much growth, but the market really responded to it nicely. Microchip in the semiconductor space. Earnings are not to February 5th. Broke out of a very short base here today with a lot of volume. First Solar, this one has been underperforming in the setting of strong solar. And you can see here had a nice uptrend and then failed, gap down on bad news. Now, if we look at earnings, February 24th, $5.22 versus $3.65. It's almost a 50% gain on a stock with a PE at 12. Something's got to give. If it meets its earnings, and if you look here, you can see it's very mixed in surprises. Some surprises up, some surprises down, and sometimes it comes in as reported. If it beats its earnings, you got to believe that First Solar is going to go up with the rest of the TAN complex. VSH, another tech play. UUUU, a little cheaper uranium, nice run up. I think the big one to buy, or the best one to buy if you want it best in class, Kramer's on the background. He's all about best in class, is CCJ. And you could see it's going to have 29 cents coming in against 26 cents, so not much growth, and pays a teeny weeny dividend. It is a dividend of 0.22%. Nice strong day to day. Seagate is one of those companies that benefits from data centers because of their storage. And wow, $3.11 against 203. That's a 50% plus. It was a 12% surprise. Revenue growth 21, a bit of a surprise, and you get what you expect, a big increase. And you're probably going to see some upgrades as well, whether they come out today or tomorrow. Sold out through 2026. What does that tell you about pricing? Two firms raised price to 500. That's not a big difference from here, but wow, wouldn't it be nice to have your inventory sold out till next year? RCAT, this one has been a nice looking chart for a while. It's got a lot of, if I remember correctly, it had a lot of lawyer things in here. When I went back far enough, there was some historical, I think it was Red Cat. I could be wrong. I heard their name a lot today at work, which means they must have something in the data world, because we're a data company, and I guess drones for defense and security options. Oh, those are the kind of things that look good. Well, stock looks pretty good here. NXPI, remember this is automotive semiconductors. This one looks really good. I remember this one was going to be a takeout, and then it did not happen in the COVID time. Earnings February 2nd, that's a beware. 331 versus 313, so that's about 25% gain on an 18% dividend, actually 18% PE, growth rate or forward PE, and a dividend of almost 2%. Why do I like this one? I don't like to buy it or enter a position before earnings, so I don't like it that much. But you could probably look at this and see that it took out those tops. So this is top down. I mean, I haven't. Have I found anything that I have to go out and buy tomorrow? No, I actually bought some First Solar today, to tell you the truth, for the reasons that I outlined. The strength in solar and the fact that this one has historically been a leader and it's been lagging here. And I'm a sucker for earnings, and it's got really good earnings. Um, and then I did a bunch of adjustments of other positions today. I think I bought something else. Um, so you can go down the list, see if you find anything you like. Another thing you could do is top down. Top down means I'm just going to go back to that initial view, which is called the impulse, and I'm going to open up A plus, which is my 2-day momentum scan. AAOI, a semiconductor stock. Lot to like on this picture, except it's getting a long ways from the 200, and that would be my only concern. So it's getting extended, and when the stock gets to 100, it sells off. When it gets to 100, it sells off. When it gets to 100, yeah, I wouldn't be chasing here for that reason. CFFN, Capital Federal Financial, nice pullback to the 50 and a breakout. Earnings were probably today or recently 128, 33% growth, a surprise on earnings, surprise on revenue, pays a 5% dividend and 11% growth rate. I like those fundamentals. I like the chart, so that's CFFN. GSAT, Global Star, 67.55, so it's just a very flat line here. See what it looks like on a weekly. I can't really tell much from this chart because of how it plots out so flat. So I think I'm going to pass on any discussion here. I do know that some of the satellite stocks have stock in Musk's SpaceX, and I think it was EchoStar. One had a market cap less than their value of their SpaceX holdings. And then Lunar, which I believe is a drone stock, Intuitive Machines, nice move up, pull back, and a breakout here. Again, the problem this one has, it's a little bit extended. But one thing I've noticed for a long time, when I get these two blue dots over the yellow line in a row, stock goes higher. Two blue dots, stock went higher. I got the blue dots with good relative strength and OBV. I might be watching Intuitive Surgical or Intuitive Machines, not Surgical, LUNR, much different price point. The other of my favorite scans is my A trade, and these would be pullbacks in an uptrend. So AAOI got it. It pulled back here and broke out. The concern I had was it was extended. ARI, Apollo Commercial Real Estate. I love the dividend, 16%. It's not an earnings story because if you look at it, it doesn't make a lot of earnings growth. It's got a multiple of 10. Again, it pays a buck on a $16 on a $10 stock, so that's a 10%, or it's more than 10%. But um, before, because it closed, actually it's going to be less than 10% because the big gap up. But it still pays a pretty massive dividend. Earnings are February 9th. How do you get on this list? You're in a squeeze or coming out of a squeeze. You got a momentum and a breakout, good relative strength and OBV. Here's that same bank, which I thought looked interesting with the two dots. I think it looks interesting here as well. DXYZ, don't know anything about Destiny Tech. Is that a NASDAQ 100 like ETF? Let's see what it says. Doesn't say anything. I don't know what's in this, DXYZ, so we're going to do a quick look at something in a second. FFIV, a little bit more expensive stock. Force F5, earnings were out on the 27th, 21% growth with a nice beat on both earnings and revenue. Multiple forward of 21, so it's probably fairly to lower price. What kind of news did it have? Class action. Well, as soon as I go to a news story and I see all kinds of data breach and stock decline, yeah, that's a lot of reasons why I probably would not go buying this. At some point, it's a great thing to buy. MSCI, expensive stock. What does MSCI do? Investment decision support tools. I think it makes ETFs as well. So it's a financial. You could see a stock that had a what I call belt hold, a massive candle taking out the lows, closing at the highs, and it really took out, gosh, all the way back to January 6th. That took out the highs and lows of every other day. What does it do for a dividend? 1%. I'm not advocating a lot of purchases right here. You're big boys and girls, you'll make your own decisions, but look, this market's got to break out from the trading range for me to get that excited, and I got to see more participation. If not, you might as well buy ETFs because it's the individual stocks that are lagging here. But of the ones that we looked at, CFFN looks interesting. And on the A plus scan, and then I'm going to go look at DXYZ one other way. On the A plus scan, it was Lunar, Intuitive Machines. Those are the two favorites that I see, although I recognize that we're extended here. I've got an ETF tool. Let me just switch to the ETFs. I'm just curious about what is DXYZ and if it's an ETF. I think it's an ETF. I'm going to pause it and let that load. Oh, I was doing one of the cardinal sins. I was wondering why they weren't loading, and then I realized because I had an A plus, and they're not going to find any A pluses on ETFs most likely. Let's go see if we can find DXYZ here. I'm assuming it's an ETF, but it might not be an ETF. DXYZ ticker. Destiny Tech 100 Inc. Yeah, it is an ETF. So it's holding. Wonder why we don't have it, because it doesn't tell you what's in there. Well, I don't know what it is. Um, but I did like the chart pattern, but I won't buy something that I can't figure out. It seems to me with the name, it's probably a tech ETF. I just can't find what the holdings are or what's in it. I hope you have a awesome, awesome, awesome um, day in the market tomorrow. It's going to be volatile with the Microsoft down and not Netflix, but Meta and Tesla up. Plus, who knows where gold and silver will end up, to the moon and beyond. Have a great one, and I hope to see you on Saturday for my mentoring. Thanks, everybody.